Hi, this is Matt from InvestiQuant. Today is Monday, October 19th, 2020. And when I was going through my alerts this morning, I noticed I had an interesting overnight session pattern that is setting up. In fact, before I get to that, here's one of the IQ alerts, which are some of our new trading signals that you can trade along with that's potentially in play here today. This one's a long signal, depending on where exactly we open, but this is a pretty strong signal. In fact, let's show you results here real quick. It's based upon the IQ edges, but this is a long signal that at this point in time looks like it's got good odds of signaling this morning. Pretty strong pattern. But what I was wanting to show you is in the My Alerts section, which is where I can save my own work and come in on a daily basis and just check out some of the patterns that I have in play that I've created. And in here, for the gap up opening filter this morning, I've got one based upon the overnight session. And specifically on Mondays, when you are getting a strong price action happening in the overnight session. Let's go ahead and load this up and take a look at what it looks like. This is for the S&P, and the setup is based upon opening in the bottom 10% of the overnight range, and then at the open of regular trading hours, you're trading in the top 25% of the overnight range. So it kind of creates like a trend-like activity in the overnight session where you're opening near the lows and then you're closing near the highs, which is right at the start of the week, regular trading hours open. So if we continue trading like we are right now at the time of this recording, where we opened at the lows, we're pushing up near the highs. This is above a 200 and it is Monday, so it's starting the week. These are the results of going long at the open with that type of pattern. And historically, it's been fairly favored. This has a stop and target of 30% of the 5-day ATR. Let me go ahead and just back that out just so we can see the end-of-day bias, which is what I normally show in here. So I'm going to switch the target and stop to end-of-day stop, end-of-day target, and we'll go ahead and take a look at it as an end-of-day bias. And when we do that, we see we've got 58 samples here of this strong overnight activity where it's pushing straight off the open and finishing up near the highs of the overnight session on a Monday, went above a 200-day moving average. And then historically, the 58 samples dating back to 2003, 62% of those have finished with a green candlestick. So historically, that has been pretty favored. And as I just showed you before, going back to end of day stop and target, it works pretty similarly as a 1-to-1 ratio with a reasonable size stop and target to trade it intraday. But historically, this type of overnight activity where you're opening near the lows and pushing up pretty much the entire session of the overnight session has been favorable to the long side for the trading session. So hopefully you found that helpful. Heads up, if you have not signed up for our webinar, which is tomorrow after the close, it's going to be a brief webinar. We won't take all afternoon with it, but we're just going to share a little bit of research, some differences between bull and bear market environments. With the election coming up, we're very likely to have a lot of volatility, and it would be nice to kind of be prepared ahead of that coming up. So we'll take a look at some statistics associated with different environments, such as strong bull, strong bearish market environments. So join us if you'd like to. The link is right below the video here. We'd love to see you there. But good luck today, and we will see you next time.